Alrighty. Okay, so hello everybody. This is Gary Dean and Woody Dorsey. We are doing our second roundtable. Today is January 9th, 2017. And we have a lot to go over, so I'm going to just hand this over to Woody, and he's going to explain some stuff as far as with sentiment and what he sees going on. So take it over, Woody.
Okay, thank you, Gary. Yeah, this is just a quick market conversation with Gary and I about some things. I'm showing the recent shorter-term sentiment, partly because there was a question, a good question from one of our users about the sentiment. And here we're looking again at the S&P 500. The blue line is the 6-day moving average of the Dorsey sentiment. Again, every day there's sentiment for every day. Now, the question he had is these individual days of sentiment. You see, like up on the right, there's 92% with an arrow, and below that, the most recent correction ended with an 11% and a 14%, which are in red. Those individual daily sentiments are ones that I superimpose on this Excel graph. So therefore, when you see that 14% bullish, that does not correspond to the axis on the right. You can see it's near the 30% on the axis to the right. Those are superimposed, so they do not reflect the absolute axis of the Excel chart. So there is a distinction between the blue line, which is a mathematical average of all the daily sentiments, and these individual daily sentiments, which I put on there when they're more or less extreme, just to illustrate certain principles. Okay, so what's interesting here, by the way, again, is that we had a correction, as you know, right in towards the end of the year, and we got 11% and 14% bullish. Low numbers, but not extreme, and then we saw the market has turned back up. So again, what this confirms is the overall preferred price pattern is that basically we needed a correction. It's just a correction within the trend up from the Trump low. So it fits. And then we had even 92% bullish that happened after a couple days of rally. That is confirming. In other words, that sentiment after the relatively low sentiment confirms that was just a corrective move, and again that the market would be going higher, which is exactly what it's done. So where this individual sentiment falls is very, very important. So let's go on and look at a little bit longer term sentiment here, which I think you'll find interesting. So this is looking at a 20-day moving average of sentiment, actually, going back over time. And again, what's interesting is how low the sentiment was at the Trump low, similar to some other important lows that we had. Again, sentiment is always very, very telling. You know, sometimes it's hard to believe because we're such rational people and we listen to all the talking heads about everything that's going on. But sentiment is one of the great realities of the market. And you see here, sentiment was very low as it would be at a typical interim low. And again, we see what the market has done. Now, there's a couple of interesting points here. We did break out to the upside. You can see the market is dynamic. But what's interesting here is we had a momentum, we had a spike in sentiment momentum, and then the market corrected and sentiment has gone off because we really were corrective for 2.5, 3 weeks depending on the index. Now note here the way these prior highs were made is you had the sentiment peak, you had the divergence, and the market kept going up for another 2 or 3 weeks. That's happened in all of these instances. So it's very typical, and this is what I've been saying, is that to wait for this longer term sentiment to show divergences before we be looking for a top. And this fits in with exactly what we're looking for from a time point of view.
You mentioned that a while ago too. That was something that you said if my memory is correct, it was in November that you said that you're looking for price to continue up. This is a breakout, and once the longer term sentiment starts diverging, we'll know that we're getting closer to that Trump top, and it will go most likely on the days that you're looking for that reversal. But yeah, no, you're exactly right. That's what you've been saying.
Yeah, so it's important to look at various scales of sentiment, how price behavior interacts with them, and to make inferences based on things like the divergence, etc. Uh, so now we're looking at the S&P 500 cash, and there's a couple of points here. Hope you can see my cursor. One of the things I've been talking about, I'm going back here and putting the cursor, I don't know if you can see this, on the
Yep,
Brexit low. Do you see that,
I can
Gary? Okay.
absolutely.
Okay, so what's interesting here is that I've been mentioning that there were similarities in that the Brexit law was a very dramatic overnight political type development. Market was down hard and then it reversed to the upside. Okay, we know all that. Well, the election low was pretty similar in that it was a political, one-off event. The market was down dramatically overnight, which of course you don't see here in the daily data, and then the market came on again. So my point was, okay, in some ways this is a fractal or a similarity to the Brexit move. Now, I pointed out what happened with the Brexit move is very dynamic. Watch it go up in the trend. Everyone gets very, very excited, and then basically it starts to kind of go sideways and get flatlined. It goes up some more, but not nearly as dramatically. Okay, and then you put in a series of little highs here. And essentially, let's say from this high right here, you start a correction, which is slow to start, so no one pays it any attention, but you basically, go down for, I guess it's like 11 weeks to the Trump low. So my point was, okay, let's pretend that this Trump low right here was the Brexit low. What would you expect to happen? Well, it would get very, very exciting. The market would be very, very dynamic. And what I was saying even back here is that the market may not be as exciting, but it's still going to go higher because it's a momentum move to the upside. And we see that the market basically started to slow down and did correct, but has come back on again to the upside. But basically, from a trend duration point of view, if you look at this whole Brexit move, it lasted into here, and that now we're beginning to get into this period of time and going into the future a little bit, where the trending function in terms of time is beginning to equal the Brexit low. Now, it's not going to tell us exactly when the top is. The point is what I was saying, looking backwards, is that this was a signal that you didn't want to short this market until at least the Brexit type fractal had reached some completion. And now we're getting much closer to that.
The pattern actually, if you were to overlay that, it's actually the fractal pattern on it is almost identical, even with the little dip that went, and then we made another minor new high, and that's when you get into those phases where it's going up and down, but really just going sideways. What I've found that does is it frustrates anybody who's trying to short the market because they think that that's the move that's going to happen, and then they get stopped out because of a 2-point new high. And then what it does, it lures the bulls in to have that overconfidence because they're, now they go into, oh, you just have to buy every dip. And before you know it, there's no shorts in the market and you have everybody buying the dips. And usually that's when you have the sentiment divergence and when you're expecting some type of reversal. And it happens, it's like we were talking about, the tops and the bottoms. The tops actually, they take much longer to form than the lows, because the lows are V's. They're spike lows, and then from there it goes straight up. So yeah, no, that's very similar though, that the actual pattern from the Brexit low to what's going on right now,
Right.
but just a little more dynamic.
Exactly. But this is what I've been saying over the last month or 6 weeks, because I've been following this. Not that, remember, with analogs or fractals, it's never exactly the same, but it gives you a picture. gives you a kind of narrative to follow, and again, it prevents you from jumping onto the short side. But now we're getting into a much more mature phase, and this is where particularly Gary with his technicals will start looking at end of wave type things. Okay, so clearly we had a pretty good correction, the market into here, the market came out, we made new highs. This is probably some kind of a fifth wave phenomenon? Maybe we're in,
it actually looks just
3
like
to 5, or so this is where. But in other words, the picture of these tools with the sentiment and the price pairing and the timing, and then Gary with the technicals, you begin to get patient enough where the picture comes in, where you're ready for what could happen.
It's funny though when I do my the regular video reports, and it's like you said, if I'm doing technicals, that's based off the price, and I read what you're saying, I listen to what you're saying, and I was telling people, I'm like, if you're gonna short, you got to be very, very quick on this. Technicals are pointing lower, but you have momentum going higher, and it's not one of those. It's not a market that you really want to get aggressively short because it's going to really bug you to do that.
Right. So now I have some very interesting things to say here. I'm going to look at the weekly chart of the S&P, and again, most of the indices are doing similar sorts of things. So there's a couple of important points here. One is clearly the market, corrected again from the end of the Brexit rally into the election. It was a good correction. It wasn't dynamic. Okay, the market's more dynamic here coming off of that, which is why, yes, this is a breakout. As I said, some time ago, this is a real breakout. There's breakout type energy. So let the thing unfold. Now, another time we can get into is, breakout moves. Some people, are probably thinking, oh, the market's going to go up for 7 years or whatever they want to think. But sometimes a breakout move is a final move. It's an ending type move. It gets everybody in. So we have to be looking for that. But the important point, there's a couple of important points here that I want to make. One is that because the market had some corrections last year, there are some very good points where the market would go back to normally. So therefore, let's say here we are, 2273 or whatever. There's a low here at 2100 back here, and of course the real big support is back here. My point is that once we can identify some kind of a high of some intermediate term degree, is you can begin to measure. Let's supposing this isn't my forecast, but supposing we go to 2340 here, then you can come all the way back down to here. That's your first support. That's a great trade. And if we did that and turned around and went up to who knows where, it doesn't matter. That's your trade. Now, here's the key point. Is this year, I think we're going to see a lot of dynamic intermediate term moves. Remember, last year was basically a range type function for the most part. Market was kind of boring. I mean, it's always exciting at the time, but this is a much more exciting market, and Trump is a more exciting, more dynamic, more uncertain type of character, and that's the kind of market that we are now in, which is great for traders, but it's also potentially not so much a trading type market as an intermediate term market. So therefore you can see, hey, if you got long after the election or whatever, it's in a trending function. It's pretty simple, right? And trying to trade those, that's been difficult. So we may look forward to, okay, to trades where you're going to have 6, 8, 9, 11 weeks of movement. And yes, you can get in and out of that, but what I want to say is that this is a very good example. You see what happened in this move. The market made a high, had a very good break, came down hard, rallied back up again really hard, then broke again really, really hard. I think we could be into something where we're going to start to see these kinds of moves, maybe even more exaggerated this year. Now, I mentioned before about some big moves. We should get 2 rallies this year, in 2 declines. Now, the other part of this is that I mentioned in prior years about what I call a black hole, which is a pretty defined low. And it did create these lows here. We had a sense of when they were going to occur. Now, last year when I was talking about it, I talked about a black hole environment, which is a little different, which is there were definitely some negative timing patterns, but they weren't, maybe that defined or dynamic. And yes, so we had a correction. It was a black hole environment. We came out of it to the gangbusters on the upside, which is why you can see the market broke out and it's still in an uptrend. Now, what I want to tell you is that we're going to get this year what I would consider a very defined black hole situation. So we should expect perhaps when the best decline of the year occurs, it will probably at least mirror this type of decline right here. Now, but the market is going to, it hasn't made a high yet, it's going to keep going up, and then it's going to correct, and we want to get involved in that correction. Now, the thing with the correction is that hopefully, it'll be 8, 10, 12%, we'll see, or maybe it's 20. I'm not putting an absolute number on it, but my point is that when it happens and the market bottoms, is institutional people will buy that dip. That will be the dip that they buy. They'll be like, oh, scary, but we've always waited for this pullback, now they're talking about, oh, well, the market can pull back 2 to 4%, but it's probably going to keep going up, so they'll be forced in, and then it will go down more than 2 to 4%, and they'll be scared. But the point is that people will buy the dip, and the rally after that could still be what I would call a secondary Trump top, like this. See this top right here?
Yep.
That's a secondary Trump top. And it will be after that all those people came in and bought the dip that you will get into, I think, a bigger decline in both time and price than we have seen in some time. And it sort of makes perfect sense. So that's just that's a part of a roadmap to have in front of us.
Well, that's one of the things, Woody, that I explain to people when they come in and say, well, you haven't really said anything different in the past month or so, and the things I try to explain to them is, if you get on the right side of, say, 1, even 2 big, whatever corrections, and then you get long on it, I said you really only need 2 or 3 per year to outperform everybody in this market, and that's not even catching the exact high and low. It's just waiting for the proper timing and seeing where sentiment is and what you think of it. But, if you think about everyone's like, oh, the S&P, it's going to rise 8%. You get in front of 2 or 3 of those moves, you're going to be up 20, 22% instead of the 8, and you really don't have to worry about what's going on a day-to-day basis. And that's the one, I really, really try to tell people is, you have, Woody is one of the best market timers in the world. And he's, you have a pretty good picture when we're going into a time period where he's expecting a reversal. You have sentiment that we're able to see to make sure that everybody's on that same page, that they believe it's going going higher or lower. And then you have regular technicals that you can now say, okay, if it breaks this support, there's going to be panic and it's going to go down. And I tell them, if you get just 2 or 3 of those moves and you get 300 points in the S&P, you're doing a lot better than anybody else in the market. And I said, it's a patient thing. We're not a day trading type service. We're letting you know, when to be long and when to be cautious on the long side, when to be short and when to be cautious on the short side. So I just wanted to put that out.
Yeah, no, that's a good point. So 2 things. One is, based on a lot of the little timing factors and the wave factors, et cetera, it doesn't look like we have a high in place yet. And of course, I've been saying this for a couple of months, just like you said, Gary. You're absolutely right. The last couple of months or 6 weeks, it's like, this thing's going higher until we get into 2017. Right. And even the short term doesn't really do much, because when you're in an intermediate term breakout energy type market, really hard to trade. Well, we're getting maybe closer to the end of that. I do think that we could be corrective here for maybe another 2-3 days in the stock market, which would be fine.
Right.
And then it would set us up for another move higher, and we can talk in the reports about starting to get closer to identifying some of that time. So now, is there anything else? I'm going to give you a bonus, Gary. Bonus. Okay. Should I pull up any chart? Is there any chart you want me to put up to look at?
Right now, I mean, the main thing that I think what you're showing right now on the S&P, I love the whole fact of what you've been saying, and I just want to point out something else that you said, and I was trying to find it, but I couldn't, but I put it in last week's free video report we did, but it was close to, I would say, November 20th in that range there, and one thing that you were stressing to members, and the S&P was a lot lower than it is, where it is now, but you said, what's one of the best ways to have a 20% correction, and that's to go up and keep going up, and you could see the S&P trading at 2,300. We're now 150 points higher, and we're what, 15 points, 16 points away from 2,300. So this is where, that kind of information, you can't put a price on that, where you sit there and you say, hey, this market's going to go up. Even from a technical basis, I was saying, from a technical basis, everything is saying to look short. But I knew I'm saying, this market has trained me that when it's in these types of euphoria type moves, and we're not near, say, a period that you're expecting a reversal, it's not. There's nothing worth shorting. You just sit there.
When I was working on inventing the trend duration analysis approach, is that I was recalled to me very much when Einstein invented relativity theory. And he used his imagination. And one of the things he said was, he was on a train going along. He said, I'm imagining that I'm riding on a beam of light. In other words, it came from a kind of, what would it be like if I was riding on a beam of light? What sorts of things might happen? And that kind of imagination led to a lot of his scientific discoveries. Well, I always said, well, imagine if you're riding on the trend of the stock market. What would that look like? What would it be like if we were the trend, if we were just going along on the trend, and then you begin to look at how long things last, what sorts of behaviors happen. I mean, I went back, this is probably before the internet, and I looked back at different highs and lows in the stock market in the 40s, 50s, 1960s, 1970s. I went back and looked at the microfiche of the news stories at the time, what people thought was really the important thing. And you begin from that perspective of history to see the same sorts of things happen at major extremes, right? So you begin to have an appreciation of the trending function of the market, what it might look like. Now, you didn't ask for this, but I'm giving you your bonus. Here's the dollar index weekly. Okay. So what's interesting is you can see it has broken out, and it's kind of had a reversal last week, and it's a little bit corrective here. But what I want to say is that we're going to fast forward, and I'm going to tell you that when we get further along, let's say maybe in Q3, the dollar index could correct here and do this, that, and the other thing, but it may yet go up to like 110 or 115 or something. We're going to get a situation where the dollar index is going to fall very dramatically. Okay, and when that happens, that's also going to be synchronistic with the stock market move and the precious metals. So I'm looking way out in time at how this dollar index is going to play into things as we go further along in time.
Can I ask you a question on that?
Sure.
With the dollar index, let's say when that move comes, would you be anticipating that a lot of people will be jumping into the precious metals?
Well, when the dollar, supposing the dollar index goes up to 110, okay.
Yep.
Let's at some point, and it does this, that, and the other thing. I have some thoughts. It goes, and it goes up. You get to a point, it's up here, and it goes from 110 back to support at 96. That's a brutal move.
Right.
If it does that, you can bet that gold's going to go up a few $100s.
That's exactly
For
what
sure.
yeah, that was my point.
For sure.
Yep.
Yeah.
That's
Well,
why the precious metals have been having a tough time lately is the dollar's just been strong, and that's been holding the
yeah,
market up and that's been
yeah.
putting pressure
But
on
you,
the metals.
yeah, but you'll notice that I'm going to go to the daily here. You notice that the dollar index had been still going up here. Again, looks like a fifth wave diagonal. Just going up here and it's broken down, but in a way maybe hasn't done that much in the last 3 weeks, and yet gold stocks are soaring. So in other words, they're seeing through this. In other words, the dollar is still pretty strong. Gold should be going down, but it's not. So it is interpreting, it's seeing through this, that there's something else going on. And of course, behind all this is a kind of the Trump reflation.
Yep.
Is behind all this as well. But these are bigger picture forces. Again, what we're going to do with the sentiment timing is to set up where you can get, where you know what your edge is in terms of shorter term movements. And even if I said, to you, look, you're going to get a tremendous, tremendous stock market decline this year, you can't put that trade on now.
No.
That doesn't help you. That doesn't help you. What helps you is what I've been talking about in the last 6-8 weeks is, look, this market's going up into January, February. Don't fight it. Don't believe in it. Let's wait for this thing to set up. So that's where we are right now. Now we're getting closer and closer, and you'll be talking about this with the technicals over the next few weeks, is setting up where the odds are. We're looking for the sentiment, and we could even see some, two days back-to-back 100% bullish.
Yep.
Something like that. That would be great. If we see that, we see the technicals, we see a reversal, we see certain timing patterns, then it gets very actionable. So let's wait and see. We'll do the regular report tomorrow.
Well, one thing I want to just I want to just reiterate here is that a lot of people, because the market gets exciting when it drops. It's boring when it's going up. It's just the way it's been. But a lot of people look at us as, oh, you're just a bearish type service, and we're not, because when you mention the black hole and stuff like that, that's actually when to start looking for a low on it. It's not, okay, the black hole eventually, it would go down into that black hole, but the black hole is when you want to be looking to buy. So we're not just this isn't just a bearish type service. It's just when things start to go down, that's when volatility picks up, and that's where things get exciting. Otherwise, it's just things get boring as they drift higher. But it seems like that, what we're doing when we find these these types of actionable trades is it starts off to the downside, but it's also, we set up that buying opportunity as well. And the good part about seeing the sentiment that you do is most of the time sentiment is at extreme lows, and it doesn't stay there that long. It usually spikes up, and that's what makes the V bottom. So I just wanted to let everyone know that we're not just a bearish website. That's when things get exciting, and they're actionable where you can make trades.
Yeah, we try to diagnose it from a disinterested point of view. And again, we've allowed for the market to go up here. We're going to get a great break. Then we'll get a secondary Trump rally. Then we'll get into a double, triple Trump top, and the market will go down importantly, which will be great. And then just as you say, decline like that sets up, hey, an amazing buying opportunity.
Right.
So we just have to follow the bouncing ball. Okay, well, let me sign off here.
Thank you so much. This was fantastic, and like I said, folks, we're going to try to keep doing these things and get them going. But this is a wealth of information, and Woody, I thank you for taking the time to do this for everybody. And until we do the next one, have a great day. Take care, Woody.
Okay, cheers.
Bye bye now.
Bye bye.